If you start talking in their language, so in saying, unfortunately, because of the increased cost of living, there are many homeowners within Irvine who are in the same dilemma as you. And that's why this campaign is focused in Irvine. And I'm using Irvine because you guys know the example, it applies to their city, right? But here's the thing is that we're pretty strict with regards to who gets access to the campaign and who does not. So I'm asking you a few basic questions first. Starting off with the property, is there an equity line of credit or is there a second mortgage? Oftentimes they say no, but sometimes they do. So if they do, right, like let's say, I just opened equity line of credit of $40,000. So the backstory of the campaign is when I worked with New American Funding, they didn't have a retention team in place, but they were a servicer. And so they would get credit inquiries, right, from a mortgage lender. And that would put off a flag, so that we call those trigger leads. And since there was no actual real script in place, we had to go through a process of, trial and error. And so at first, we'd contact them and say, hey, we just got word that you're in the market for refinance, and we just want to make sure that we are able to retain your business. And what happened was that a lot of the clients, they bounce back with defense. They're like, well, why are you monitoring my credit, right? Why are you doing that? Why are you calling? It's like an invasion of privacy. Does that make sense? And so as it evolved and as I grew what was called the SAVE team, I had to kind of create the approach prior to actually building the team. And so I was the only one who was actually taking these leads, and I was getting hung up on, and it was different, right? I'm like, dude, these should be laydowns. And so I had to create a different narrative. And that narrative was, even though I knew that they were shopping, or even though I knew they were in the market, I had to act as if I didn't know, right? So it had to be almost like good timing, right? Oh, good thing you contacted me, because, in their head, I'm actually thinking of doing a refinance. And so then I created the script that, many of you have probably already downloaded before in the past. But the primary difference was I called it campaign. And I said, we have a campaign that's specific to our clients within this area. That made it sound different. Now, even though we are not working on trigger leads, we're working on anything, data. They're calling in, on direct mailers. People are calling in for a cash out. They're calling in because they see a 2.25% interest rate, or we're getting live transfers, right? Why do we want to use campaign in today's market? Is because the truth of the matter is that when people have the notion that you're hunting or trying to offer a refinance service, they're going to immediately say what? Right? Because this is fault of media. And so everything from, the internet, social media, people follow the market, you hear it on the news everywhere that the rates are up, right? So if we go at an approach, the traditional approach, which is, hi, my name is Daniel Niekart, is Kevin Foster available? Hey, Kevin Foster, how are you? I wanted to see if you'd be interested in doing any cash out refinancing for your property. If this interests you, you may be able to use it for home improvement or debt consolidation. But just empathy, right alone, as a consumer, if you heard that approach versus the script that's put in your hands, how would you handle the two differently? So that's how I'm looking at it. If you understand the script right now, what it sounds like is, hey, it's a good thing you called. There's the campaign that you're contacting us about. Oh, I'm sorry, the notification you received is regarding a campaign that's specific to Irvine. And this is because you have their area, you have their profile up, right? When people think that it's elite, like it's exclusive to them, they want it. Does that make sense? It's kind of like, I don't know how many people own a home, but if you ever cross by like an HOA, like a homeowners association, or if you've ever been to like Mission Viejo Lake, right? And you've eaten at the restaurants on the lake, you're like, man, this is nice. But you can't go in there unless you're a resident there, unless you actually pay homeowners associations there, right? So, but again, another thing, it's status. Like, everything break down from Costco to Equinox or 24 hours, right? It's exclusive to them. So what the idea and the psychology is that if it's meant for homeowners specifically in this area, now the question is why, right? And that's actually addressed within the wording of the script, but sometimes we just don't know it's there. I'm used to it because that was always my approach. So I say, the reason why we're receiving this notification is because we actually have a campaign specific to the homeowners within the Irvine area. And before it fills the capacity, because it almost is, I'm gonna ask a few basic questions first just to make sure it can even serve you. If it can't, I'll hang up the call, save you a ton of time, point you in the right direction. But if it can, I'll show you exactly what it can do for you, so you have the information at your disposal, right? So now it becomes a win-win. And of course, then I say, it really, Kevin, it really comes down to one or two things. And this can help me save a ton of time. And I'll let you know if this is even applicable to you. Is that it depends on what your focus is for your property on commerce. Why do I do that? Right, authority. We know them. Does that make sense? Okay, so even if we couldn't find the lead within our CRM, right? Because sometimes that can stumble us and then we feel like we're not equipped. We could still verify, like, okay, and can you verify the address that you received the notification? Yeah, 250 Commerce. Okay, and then the city, Irvine. Now you're equipped, right? So you could still move in and apply these words, but there's meaning as to why you're applying these specific words. Is because it's familiar to them. And people are more likely to attract towards familiar things. So when you start talking about things that apply to them, it now feels tailored. Does that make sense? Do you believe that people pay extra if it's specific to them? Yes, especially when it comes to attention. And that's really what we need, is their attention. You cannot expose their why until you actually have their attention and their compliance. And that's why we name these things. Even though that is a one-off, that they want to pay their house off sooner, they're financially capable. The truth of the matter is, though, is that we're in a market where debt is exploding because inflation, increased cost of living, right? People's pay or income is not keeping up with inflation. So they might have a pay increase, built in 2%, but cost of living has gone up more than that. Does that make sense? So now it becomes a time of scrutiny. They are now going also into a shock. So even though they had that $700 savings, the increased cost of living, since they've already now accounted for that, that's why people are check the check, because their lifestyle then became adapted to that extra cash flow. They threw another bill in there, right? And that bill could be anything. It could be a new car. It could be a new, literally anything. They bought an RV, right? They got a boat. They got a timeshare, whatever it was. That's just what we do, right? As humans. And that's why, when you make that X amount of income, all of a sudden, I doubt many LOs were still dipping in Honda Civics when their income exploded. Right? I doubt they kept shopping at Mervyn's, JCPenney, or Kohl's, because they then adapted. So not to that extreme level, but our consumers also did the same thing. And so they had this extra amount of money, they started traveling more, everything was good. Now the media hits them with fear. How do we leverage that fear? Through a campaign that's specific to them. When you make it specific to them and you say that the campaign is actually meant for homeowners who are trying to achieve that, the campaign is specific for homeowners who need to pay off their home by a specific time. Now, all I need to do is justify why you, out of everyone else in Irvine who's trying to achieve the same thing, why you should get your seat and access to the campaign. Because your area has a lot of homeowners who are doing the exact same thing. On the flip side, if they say, what? I'm trying to maximize my savings. Which one do you think they say more? Savings, correct. So But again, I want to show you it doesn't necessarily matter, right? So you should not be deflated if you hear that they're trying to pay their house off sooner. Or you should not be deflated if you hear that they only got $4,000 in credit card debt. Because that's not necessarily, right, the justification. So here's the why. So the why actually happens in the first call. The how and the what is the second call. This is the pitch. Okay? So let's take the average lead that we talked to real quick. Based on our script, we jump right into it, don't we? So we say, hey, this campaign is specifically meant for you. Let me just ask a few basic questions. But there are words that are missing out of the script that requires our intuition. And so if the borrower says, I'm looking to maximize my monthly savings. So what I personally would say is, okay, perfect. This campaign is specific to homeowners within the Irvine area who are trying to achieve the same thing. Unfortunately, this dilemma is more common than you think. So you're not the only one in Irvine going through this. Now it's different, right? So one, they feel like, oh, okay, I'm not alone. Two, my city is doing it as a community. And again, like I showed an example, as a community, if everyone's gathered up and everyone just immediately out of nowhere just got up and ran this way, what do you think instinctually you're gonna do? You're gonna fucking run that way too, right? So there's something about community that from a human instinct level that's able to connect with them. If you start talking in their language, so in saying, unfortunately, because of the increased cost of living, there are many homeowners within Irvine who are in the same dilemma as you. And that's why this campaign is focused in Irvine. And I'm using Irvine because you guys know the example, it applies to their city, right? But here's the thing, is that we're pretty strict with regards to who gets access to the campaign and who does not. So I'm asking you a few basic questions first. Starting off with the property, is there an equity line of credit or is there a second mortgage? Oftentimes they say no, but sometimes they do. So if they do, right, like let's say, yeah, I just opened an equity line of credit of $40,000. What would you say? Correct, yes. Why? Why did you open an equity line of credit for $40,000? Oh, we bought a boat. You say, oh, okay, nice. Correct, yeah, right. So now we understand their status. We understand their way of living. Make sense? So they're more about status. Or, yeah, we did home improvements. What did you do to the home? We completely gutted the kitchen. I redid the bathroom. Perfect. Is there any other projects that you still need to complete? Or are you still in the midst of any construction? No, we're all good. We're all straight. Okay. So now you have a $40,000, I'm not going to say this, but now I know within a minute of saying hello that they have a $40,000 credit card against their house. This is how you sell against equity lines of credit. So a mortgage, you understand, its interest is annually. You guys get that? Whereas a equity line of credit, it compounds interest daily, and it's an adjustable rate. So meaning, if that rate was, let's just say, adjustable 8%, it's 8% times the loan amount times however many days. It's based on the balance. That's what makes your payment, your interest-only payment. It's because it's every single day based on the balance. It compounds interest, and then you get your payment. That payment is just specifically interest only. So that's how you actually sell against a HELOC, but I'm keeping this information in my back pocket. But that then becomes the why, right? So the why is 40K HELOC, and it equaled a boat, or whatever it was, boat, home improvement, right? Whatever it was. It could be anything. I just now know that they have a credit card tied against their house. And next part of the script would say, okay, so in order to get access to this campaign, the campaign is really more focused on what's called your net. And what your net is, Cameron, is basically how much of the net income, which is what you actually bring home after taxes and after you pay all your bills. So after the equity line of credit, after your mortgage, right, and after your debts, what we're looking for is how much actually goes to your bank. But before I even get there, let me ask you, with regards to debt, now I know you got an equity line of credit, how about credit card debt? So average about 20K in credit card debt. And then what do we ask them?
You pay minimums or not more than
Almost.
What's the amount that you pay?
Correct. What is the amount that you pay towards the 20,000? And what do you think they would say, roughly?
The minimum payment? Couple hundred.
No, they actually give you an amount, right? So they'll give a rough estimate. They'll say, I pay about $1,000, right? And then we ask them, okay, so the $1,000, do you know if that's a minimum due or is that above and beyond? And then they'll say, you know, because ego, I pay a little bit more than the minimum, right? But we don't laugh, right? We just say, okay, got it, good job. But this now tailors into so if you're paying $1,000 to credit cards and you got the equity line of credit payment and then you got the mortgage, there are other things in life like groceries, insurance, gas, which is skyrocketing, cost of living, groceries, everything's increasing. The net is how much after all these bills are paid for your net income can you actually net to yourself in checking and savings. And again, they give you an inflated amount, right? So, you know, after they say, or what's the average that you hear?
few thousand.
Yeah, it could be anywhere, right?
Yeah, they have 40,000,
So a couple hundred, couple thousand,
about $5,000.
but it's always inflated. I promise you that. Because again, ego, right? So they're not accounting for everything. Plus, you're more than likely talking to someone who's actually not covering the bills. And that's why we have to listen to certain things. Like, I have no idea, or we, right? I think my wife, or I think my husband, right? It means they're not connected to the numbers. So am I going to ask him for specific information? Like, what's the details on your insurance? How much do you pay for homeowners? Yeah, you're gonna fucking scare them off because they don't want to sound dumb, right? It's human nature to protect ourselves. So when we hear things that intimidate, we then start thinking like, what's the consequence if I don't know the information I'm giving you? This is why they're not tied to the second call, because there's no fucking, right? Either they're embarrassed or they say, hey, they talk to the spouse, like, hey, I had a conversation with some guy, he was talking about a campaign, he was asking me all kinds of questions about our bills, right? If I told that to my wife would lie, like, you have no fucking idea what these bills are. How did you have this whole conversation? Anyway, he's calling us at 6, can you be here? No, right? Because it's about a refi. Babe, we see it on the news every day. The rates are up, right? So that's why it's not really being tied. And sometimes, they're not answering the call on the second break. But anyway, let's say their net they tell you was $500. And truth be told, they always say it's usually about 1,000 or 2,000, right? Because that, again, is ego. But what allows us to get the deeper why is to say, okay, so after all your bills are paid and all your expenses are met every single month, if you're adding $1,000 to $2,000 to your checking and savings, what is the average balance you have in checking and savings? But we don't jump in right away, right? We don't start selling them. We don't start solving problems. But what they're gonna say is about $1,000, sometimes even less. And so now we understand a few things. This is just within the first 2 to 3 minutes of them saying hello. You guys have to understand the leverage and the power of that. So, and the reason why it's built this way is because now we have to then go to the application. So if during the application I start asking questions about income or employment or who's on the loan, and they hit me back, it's like, well, why is this important? Why do you even want to know? Now I'm armed with all the leverage. Well, the reason why I want to know is because I need to get you access to the campaign. Like I mentioned at the very beginning, I got to ask you a few basic questions to make sure I can help you. From all of this, it appears that I can help you, right? Truth be told, you have a $40,000 credit card held with your house as collateral. It compounds interest and you can't even write that off. Let alone you're making the minimum payment on $20,000 of additional credit. So overall, you have $60,000 in credit card debt, 40 of it holding your house for collateral, 20 of it not tax deductible, but nonetheless $60,000 in debt that's weighing your FICO down. This campaign is specific to homeowners who are in your scenario. As a matter of fact, I think you need this more than everyone I've talked to since this campaign launched. You fit the exact criteria of why this campaign was launched. Let me show you what I mean and then go back to the application. Would you comply if I said that? Yes. Yeah.
Almost counseling.
Correct. Right? You're counseling them, but you're still driving the call. Leverage. And that's why it's helpful. That's why it works this way. That's why we don't ask the borrower after they say hello or when we connect, how are you doing today? Or, hey, what's your goals today? What are you looking to do? Right? Why? Because then they would say, oh, well, what I'm looking to do is get this 2.25 on this mailer. How do I get that? Now it just changes the trajectory of your call. Because you do not have this leverage. Does that make sense? So you need to pay attention to that because that then becomes their why. What I was talking about, the deeper emotional ties, is when we go through the application and we know that they're living check to check and this is staying the same. And then I find out that both are let's say one income in the household, which is one of the most common things, right? There's usually one of the spouses that do not work, but that means they have kids, dependents. And so if I find out that they have a 3-year-old, a 7-year-old, a 10-year-old, and a 16-year-old, and they're living check to check. Now that's the emotional tie, right? That's where you actually get to peek at the primitive emotion of protecting your own. That is something that's hardwired into us as in nature, right? It happens with animals. You know, I went out to dinner with my family, and there's like this little pond by the restaurant, and it was this mom duck and like 4 little babies, right? The mom never left the babies, but the mom then took the babies out and literally crossed the fucking street as there's traffic in the parking lot. But guess what? Everyone stopped because it's instinctual to not hurt kids, to protect kids. Make sense? Now, it's instinctual also that mom did not leave any of those kids behind. That is instinctual. How can we leverage that with regards to what we do? Because I know that if they have a 3-year-old, a 7-year-old, 10-year-old, 16-year-old, the mom is more focused on the future and well-being of them. I also know that the 16-year-old kid is soon to have a car, right? And then it can also help the mom drive these other little 3 fuckers to their karate class, right? So there's motive there. But more importantly, how are they creating and securing their future if they can't even maintain the cost of living as is? So if the nightmare of any family is downgrading, because then it changes status. So when you know that these people have owned their home for, let's say, what do you think, average, that they've owned their home? Yeah, okay. So I would say about 2 to, let's say, 7 years, right? A lot of people bought their home, within about that 7 to 10 year period. Now, how do I connect this to this?
They bought the home, they didn't have the debt.
Childhood home.
Correct. Your kids grew up here. I also know that if you spent 7 plus years, you're well adapted into the community, right? They say, oh great, you have this many kids. Do they all? Are there other kids in your block, right? Do they go play outside? Are there friends there? What I also know is that at 7 years old, these kids went to the same school district. They have a certain group of friends. I know that if it was 7 years, these 2 kids, that's all they know. They grew up in this household. So that's when I'm talking about the powerful emotional tie that sometimes we're not talking about. Now, even though I get this why, I don't necessarily, pound them on it right away, right? Because I save it for the how, and the how and the what then comes into, the second call. But now that I'm armed with this, it has to be used to frame for not only number one, urgency, but also two, the date of birth and social for the credit pull, right? So how would it sound? It would sound something like this. Hey, Ryan, here's my thoughts is, I've gone this far in the conversation because obviously I believe this campaign was specifically designed for you. More so in your situation and scenario, if all these numbers check out correct, I think you actually were the ideal person that this is created for. Because everyone that I've been talking to in Irvine are not in the same situation. They don't have $60,000 in credit card debt, living check to check, and also 4 extra mouths to feed, 1 income source in the household. Your kids literally grew up in this house. They've gone to the same school district since you've owned the house for 7 years. I want to help you get access to this campaign to not just protect your finances, but the sanity of your family and your marriage, and make sure that your kids grow up with stability, and make sure that your sanity is kept by not having to worry or argue about finances. The truth is, what we can't control is the cost of living. All that's up. What I can help you control, though, is the amount of money that's going out. And if I can help you control the money that goes out and you get to secure it, that means you just have more security for the household of 6. That means you have more security for your kids, more confidence that you get to stay in this home and pass it down to them. But here's the thing. What time are you in front of a home computer by any chance, by the way? I'll be at home in front of my home computer by 6. Okay, what about your wife? Even though she's not the homemaker, even though she doesn't pay the bills, I always include the spouse. Well, I'll be home at 5:30. Okay, and your wife will be there? Yeah, she's a homemaker. Okay, so I'm fully booked for the day, right? And I'm talking to this dude at like 10 a.m. I'm completely booked, helping other homeowners take action on this campaign, because again, like I said in the very beginning, it's filling up very fast, right? So if I move my 5:30 and I put you there because you deserve it more, I'm gonna need a few things from you. And this is where you create the urgency and start mapping out the dots. Does that make sense?